Hey guys, what is up? Andrii Skvortsov is here, and how are you doing? So, market crashes here, and congrats on that. If you're still there, then you survived this market crash of 2022. Most of the companies have dropped significantly. The whole index S&P 500 dropped about 10% since the beginning of this year, and today we're gonna talk what to do and what are the main principles that every investor should follow, and especially to remember them during the times of a recession, during the times of market crash, and all things like that. Let's get started. So the thing is, we cannot know why the market crash is going on like that and what are the reasons for that. Maybe that are the political tensions in the world, maybe waiting for the recession, maybe high inflation, and actually no one knows for sure, but usually it's a combination of that factors. We do not know for sure what will happen next, when this market crash will end up, or when it will go down even worse. So we don't know that, but what we know for sure and what we can control are the basic principles of investing that I want to repeat today. Of course, many of us have heard them, but these are the basics, and remembering them in a times like recessions and market crashes especially important. So the first thing I want to talk today about is having a strategy, alright? Having a strategy that you are following all the way long since you start investing and until the end of your investment career. And these are the basic rules and strategies and principles that you are following during all your time of investment, and ideally these rules shall be created even before you start your business in the stock market, before you start investing, and these principles that everyone knows, and they should be only slightly corrected during the times of your investment, but the basic ideas shall be adhered to during all your way. This is like a path from where you are now to your financial goals, following your financial plans, and this is a strategy. And of course, we should not panic. Panicking is not the thing what we should do, especially during a market crash. Being patient is one of the most important things that what we can do for ourselves, for our portfolio, and for our nerves. As Warren Buffett said, the stock market is a machine that is pumping out money from the impatient ones and giving it to the patient ones. So please be patient. Now, the second thing I want to talk with you is being regular in investing. It means that the time in the market beats timing in the market. Now, there are many researches showing that if a person tries to collect money and then to select a perfect moment for investment on the dip, then this strategy in most of the cases will underperform the strategy when a person just regularly investing its money over a certain period of time, for example every month or every quarter, whatever you decide for yourself and whatever is good for you. This is one of the craziest story. So you're just investing on a regular basis and you do not worry about news, do not track your stocks, just investing on the regular basis. This is a super cool idea that I found out for myself. It beats the strategy for picking the right time in most of the cases. This is one of the best things in the stock market. And before we are going to the next topic, please smash a like button for this video. It really helps this channel to grow and videos to get recommended. Thank you. Now, the third thing I want to talk today about is diversification. Now, I'm sure we all heard this word many times, that diversification is a free cheese in the world of stock market. We should diversify our assets among the portfolio that we're having, and this is actually all true. And I don't have anything to say here except some few tiny things. First, diversification shall not be made for the sake of diversification alone, alright? Idea of diversification is that the stocks or the companies or the sectors that you're picking should not correlate to each other too much, ideally. That the correlation between them is not too strong, so that when the market crash is happening, some stocks are dropping down, the rest of your stocks are racing, so that overall your portfolio is still holding on. And this is the idea of diversification, and why sometimes we should not pick that many stocks from the tech sector, and we would rather go on the oil and gas or something like that, utilities, because you may think that, oh, tech sector stocks are so good, so pretty nice, but in times of a market crash, other sectors may outperform such a good and high margin sectors as tech or as communications, and that is why we should use diversifications among countries, among currencies, among stocks, among sectors, among risk factors that are driving different stocks, and among our portfolio parts. Some of them should be more conservative, other of them may be balanced, and the third of them may be about risky or speculative parts of our portfolio, and this is also diversification by the risk. Now, one more thing I want to talk to you today is cost reduction, alright? What does it mean? That everyone is talking about allocating its assets and how to pick the right stocks and all of that, but what I mean by reducing costs is just simply when you want to invest, first you transfer your money from your bank account to your brokerage account. Maybe you're paying Swift commission for that or something like that, you're paying commission for that. Then from your brokerage account, you want to make some transaction, you want to buy some shares, you're paying another commission again. Then you want to sell that stocks, you're paying commission again. And then you want to transfer that money from your brokerage account to your bank account, again you're paying some money in commission for that. And after all, you're paying taxes to your government. And this is a lot of profits to lose. And if we optimize things like transferring your money, paying less commissions, picking better tariffs in our brokerage account, this may help in the long term for us to gain more money. So cost reduction and optimizing our expenses in the world of stock market and in the real world helps a lot in the long term. The fifth thing I want to talk with you about today is rebalancing. And I'm pretty sure that most of us heard about rebalancing before, but I just want to remind the genius idea about rebalancing that when in times of market crash, for example, like now, some of the stocks are performing pretty bad, others performing pretty good. And then what is rebalancing? When you're selling the stocks with a high price and then buying the stocks with a low price. And this is true magic of rebalancing, that you are matching the appropriate allowable level of some certain stocks in your portfolio, and then you're doing that by the best price available on the market, and especially if you're doing that during stock market crash, because some of the pretty good stocks may cost super cheap, and rebalancing was created exactly for these purposes, to buy cheap and to sell expensive. And the last thing for today I want to talk to you guys is long-term playing, alright? When we're playing in the long term, there are highest chances that we'll gain money on the stock market. And the thing concerning the long-term investments is patience, is calculation, having a strategy, and bringing up the habit of investing money, of putting aside every month certain amount of money you can afford to yourself and invest that. The habit of investing in the long term. And in that way you appreciate every amount of money that you owe, and you appreciate it, and you do not spend it for anything just for the sake of spending. You appreciate every amount of money. And this is a true understanding of value for that money, how you earn them and how you're spending them, and investing is exactly the thing which teaches you confidence, patience, and habit of investing. So these were my 6 things which I just reminded to you guys, everyone. I know that you all know them, but these are the basics, and I have to include this in my videos because they're super important for every investor, no matter if you're a beginner or if you're more advanced. We have to remember them, we have to recall them, and not only talk about them, but really following these ideas. And we've just talked about having a strategy, being regular, having a diversified portfolio, cutting the costs, rebalancing our portfolio, and playing in the long run in this investment game.